Good Monday morning from Yahoo Finance's New York City headquarters studios. I'm Yahoo Finance executive editor Brian Sozzi. You're watching 3M ringing the opening bell at the New York Stock Exchange. Big fan of their tape over there at 3M. I think that's Scotch tape. Biotech company YD Bio Limited getting trading underway at the NASDAQ. They do not make Scotch tape at YD. All right, after a stretch of surprise with volatility in markets last week as trade tensions return to the forefront, sense of calm has returned to stocks, at least for today. There will be lots for investors to digest this week. So much going on Monday, I can't even get out of my mouth. That could upset the apple cart, so to speak. Everything from a consumer price index release to a barrage of top-tier earnings from the likes of Coca-Cola, General Motors. I should also remind you today is day 20 of the government shutdown. This is now the third longest government shutdown in U.S. history. But who's keeping track? Let's head down to NASDAQ and check with Yahoo Finance senior reporter Brooke DePalma to see what's hot in the markets in the morning. Brooke.
Good morning, Brian. Well, we are off to a strong start to start off today's trading session as well as this week. All three major indices in the green to kick off today's trading session. Leading the momentum is the S&P 500, up about 0.5%, moving higher at the open. Right behind it is the NASDAQ, also up about 0.5%. And then the Dow just slightly behind, up about 0.4%. But taking a look at the S&P 500, I do want to take a look at a 2-month chart because we are returning to the highs the record highs that we saw on October 8th. You could see right there that right now we're kicking off around here, and right now we're just a few points away from that record high that we saw earlier this month. But taking a closer look, I do want to take a look at shares of Amazon because this morning we did have that outage when it came to AWS, and right now, as you can see there's our screen right now. Amazon is up just slightly higher despite that wide outages that we got around that Amazon Web Services that impacted companies like Roblox, Slack, Coinbase, Snapchat, as well as Disney. Once again, Amazon shares, though, really shaking off that. Investors not too focused on it. The stock is up now about 0.4%. Amazon did say that was fully mitigated, that outage that we saw earlier this morning. Also want to take a look at Apple because Apple's moving higher. We heard some bullish calls from Blue Capital that this iPhone demand has about a 15 or 25% upside over here. So now we are seeing that stock. And this is, really this momentum that the stock has been getting just over the past few days. So we'll keep a close look on that. And then lastly, do want to take a look at Bitcoin because after we saw some pullback within the cryptocurrency, we now are seeing some renewed momentum there. Cryptocurrency up about 3% in the early innings here, really trying to get back to that record highs that we saw at the start of this month, but not quite there yet. Still down about 4%, but Ethereum crossing back above that 4,000 key threshold there. So once again, taking a step back, all three major indices indicating a strong start to this week, despite that government shutdown, and really thanks to those easing tensions between the U.S. and China, and really all eyes now on earnings season.
Brooke, what did they just forget to plug something in over at Amazon with AWS? It's as simple as that, right?
Absolutely, yeah. I mean, they said it's fully mitigated, but, we'll wait to see. It seems like investors just kind of shaking off here. Just
plugs that stuff into the wall. All right, thanks so much, Brooke. Appreciate it. Here's what I'm tracking out of the box today. Bears lurking beneath the surface. Some calm has returned to markets after last week's volatility spike, but that doesn't mean it's smooth sailing again. We are witnessing a rotation to utilities, healthcare, and consumer staple stocks as investors seek out more defensive names. Is this a warning sign that bulls need to worry about? We'll discuss. And the Bitcoin bulls return. Bitcoin rose above $110,000 early Monday, rebounding alongside the broader crypto market as gains returned, with traders having more confidence in the economic outlook for the U.S. Spot Bitcoin ETFs are also catching a bid. And zeroing in on two different Mag 7 names, the Amazon AWS outage Brooke was just talking about has cast new light on the underperformance of Amazon stock this year, at least for me. Amazon stock is down 3% year to date, by far the worst performer from the Mag 7 space. Concern continues on the pace of growth at AWS. On the other hand, Apple stock has quietly perked up of late. It has gained 6% in the past month on growing sentiment. The iPhone 17 is a surprise hit. Evercore ISI adding Apple stock to its tactical outperform list today, saying its iPhone data suggests this may be more than the average iPhone refresh cycle. All right, here in the opening bid roundtable, Palace Capital Advisors founding partner and CEO Rich Mullen and Yahoo Finance senior reporters Brooke DePalma and Ines Ferré. Rich, coming to you out of the block here, seeing a rotation into more defensive names in this market. What's the signal there for you?
I think it's a healthy rotation, quite frankly. We like to see a broadening out. Everybody's been talking about the narrowness of this market in the Mag 7. I think that probably people are maybe hedging a little bit here. There's a forgotten element in this market, and it's been some of the names, some of the more value cyclical names that we're seeing strengthen. Transportation index rallied here this past week, which was a good sign. We're seeing, positives from some of the transportation companies themselves, be it trucking and so on. So I think this is really a healthy rotation, and I think it's really kind of maybe a little broadening of the market that people are trying to find some value outside of the Mag 7.
Rich, when you say healthy, does that mean this rotation should continue?
I think, again, there's some real value here. I mean, I'm going to talk about another segment of the market here in the international, but I think right now what you're seeing is we're seeing a lot of efficiencies and productivity come out of this AI. And I think that with the specter of lower rates, which everybody's kind of banking on right now, I think you're going to see a tailwind here that's going to provide a bit of a boost. Let's not forget about some of the administration policies here, the reshoring of manufacturing, some of the other tailwinds on the stimulative side, the big, beautiful bill. This is not necessarily directed at benefiting the AI's trade at all. This is actually directed at providing a tailwind from other segments of the market.
Rich, if one wants to get more defensive here, if they share some of the sentiment or views that you just expressed, what's the better bet? Consumer staples? Everybody thinks consumer staples are this defensive investment, despite the consumer still being under pressure and earnings estimates coming down for the space, or do you rotate into gold, even considering how far it has run?
Yeah, we've never been huge gold fans, but I do think that the rotation into the cyclical sector makes a lot of sense, the value cyclicals. However, we've been actually finding a lot of value overseas, which hasn't really been talked about much, right? So earlier in the year, we made a little bit of a tactical shift into the international. People aren't talking about the fact that South Korea is up almost 50% this year. Even China is up 14, 16%. So when we talk about being defensive, I think it's more about being diversified and spreading out that risk and looking for some value in the market. Yes, it exists in the cyclical part of the value part of the market here domestically, but also I think the value trade could be put on in the international market as well.
Ines, I wonder if this rotation in utilities is that classic safe haven move. Utilities, of course, are now tied to the AI trade. All these AI companies sucking power out of our grid.
I was just going to mention that. I think that utilities has definitely been acting like a growth sector in a way, because it is up 21% year to date. It's outperformed the S&P 500, and you have some names in there that are definitely tied to the AI trade and the electrification of the U.S. and the upgrades of the grids, and also just an industry that also the U.S. Government is also very interested in making sure that it prospers as well as part of this whole industrialization that was just talked about. So utilities has been sort of the go-to for the ancillary AI trade, and it also tends to perform better also when interest rates start moving lower as well. So it has some tailwinds.
Ines, you're also my crypto lifeline. You've been my lifeline throughout this rally this year. What are you seeing right now? Because I do find it interesting. We're seeing crypto, the bulls returning at the same time we have this rotation into more defensive names in the market.
Yeah, and it was a little shaky there last week because it was very much a head scratcher as to why Bitcoin was down so much. But look, you definitely have the bulls that are back in the driver's seat saying that we're starting to see, and you have to see if this will play through, but they're saying the market may be starting to see some rotation again going into Bitcoin. There's a school of thought that you will see rotation coming out of gold into Bitcoin. Gold, though investors are still buying the dip when it comes to gold, despite the massive rally that you've seen. But certainly October, right now, it looks like it could play out to be a good month for crypto if it continues at these levels.
Brooke, this consumer staples trade will be put to the test, tomorrow with Coca-Cola. And I was thinking back to what Coca-Cola CEO Ramon Laguarta told me a few weeks ago. The consumer's still under pressure. What do you think Coke may put up?
Yeah, well, right now we're looking at strong demand here in the U.S. This resilient U.S. consumer that's able to pay up those higher prices and increase the volume growth for Coca-Cola, albeit pretty low volume growth is what Wall Street is expecting. And really, we're expected to hear that not only will the U.S. be strong, but Western Europe will be strong. And similar to what we heard in previous quarters, they're expecting to see weakness in Latin America, that key China market, as well as the Middle East. And really, based upon what we heard from PepsiCo already, it's likely that we'll hear this ongoing trend of bifurcation between the high end of consumer continuing to pay up for prices and, seeking out these sort of maybe more premium drink offerings, whereas that low end consumer is really focused on the basic essentials right now.
Rich, I mentioned at the top of the show, Mag 7. We're seeing a lot of divergences within these 7 stocks. Looking at Amazon and Apple, I mean, Amazon stock has done nothing this year. It's actually down slightly. Apple has started to rally because people think the iPhone 17 is going to see a better than expected upgrade cycle. Of these two names, which one do you like?
I think from a value standpoint, Apple is kind of written off here the last year and a half or so, but that's always proved to be a bad bet. We are still very bullish on Amazon as well. I think that AWS snafu here was just a blip in what's really a long-term secular story here. And I think earnings right now for the Mag 7 across the board are going to be strong. The worry, of course, is this a little bit of a sugar high? We talked about this earlier. Is this going to spread out throughout the economy? I think it's a good point, too, that utilities are seeing some favor in this trade because they're providing that energy, and it is turning into a little bit of a growth sector. But then you have the support of the drop in interest rates across the board. So we favor Apple, love Amazon, but I think the trade's starting to broaden out here, and we're going to see some appreciation in some of the other parts of the market.
Rich, when you dissect Amazon, and you just said you love Amazon, what's more important when you open up that earnings report right now? Is it the growth rate in AWS or the growth rate in that traditional retail business?
I think primarily it's AWS because I think they're both kind of tied to some degree, but you do want to look at the consumer through that Amazon lens. I think that's kind of important. That may be another indication. We saw some language out of Best Buy, the CEO talking about this bifurcated consumer. I think that's a real issue that we have to pay some attention to, and some of that data, maybe kind of teased out through the Amazon retail numbers.
Brooke, you just caught up with Best Buy CEO, right?
I sure did, yeah. And what you really told me is this need to convince the consumer to buy right now. We're still in this environment where consumers aren't necessarily investing in a home theater or, a new computer right away. They need to have a reason to splurge and spend the kind of money that goes into, this latest iteration of a laptop or an iPhone or so on and so forth of AI around a device that has it. And it needs to be at the right price point. And that's really why we haven't seen the strength of Best Buy that we saw just a few years ago, especially when consumers had that stimulus money to spend. Now they've just sort of have to convince to buy right now. And that's really the trend that we're going into this holiday season with as well.
Ines, I spent the weekend configuring my new iPhone 17 Pro Max that I waited 3 weeks to get. It's a whole ordeal, but I think others seem to be with me. I mean, they might be upgrading their phone faster than people thought, in large part because of the battery. I just need it for a new battery, Ines. I mean, that's the reality of it.
Yeah, look, I mean, Wall Street was disappointed at Apple because it wasn't really within the AI trade a big leader. But look, it's back to the basics for Apple, and it's their iPhone. And now Wall Street is saying that this iPhone 17 is going to be a bigger upgrade for consumers, and the cycle for the upgrade is going to extend into 2027. So it's now back to the races with this stock. I mean, Loop Capital just put a street high of 315 on the stock with a buy rating. So definitely Wall Street is now bullish on the fact that, yes, people like you need a better battery in their phones and they are willing to upgrade.
People like me, yes, Ines, always on the go. I need a big battery. Maybe the Loop team could come over and configure my phone for me because I'm not having any luck. Big thank you to my opening bid roundtable, Rich Mullen, Brooke DePalma, and Ines Ferré. Appreciate it. Coming up, I have a good call on Netflix into earnings tomorrow afternoon, and Coach's longtime CEO weighs in on the outlook for luxury retail with tariffs in place. We'll be right back. Welcome back to Opening Bid. Netflix will report after the market close on Tuesday, and some comments from KeyBank caught my attention today. If anything, I think they skew bearish on a stock that is down 3% in the past month. Says the KeyBank team, we do not expect any major surprises on Netflix's third quarter earnings, as an improving content slate drove stronger third quarter viewership, and fourth quarter catalysts like Stranger Things are well known by investors. While we are braced for more modest margin expansion commentary for next year, given this year is tracking ahead of expectations, our sense is investors also expect this and would view any dislocation as a buying opportunity. Love analysts speak. Longtime coach CL Lou Frankfurt helped take the company from a small leather goods player in New York City to a global accessory luxury powerhouse. In his new book called Bagman, Frankfurt shares his journey through the corporate ranks, including balance with depression and a host of other operational challenges. I had the chance to sit down with Frankfurt in a wide-ranging interview for my Opening Bid Unfiltered podcast. You can watch that full episode today on Yahoo Finance and YouTube, and listen in on Apple, Spotify, or Amazon. I did want to isolate what Frankfurt told me about American manufacturing now that tariffs are back at the forefront of investor minds.
I love Coach, and I think I loved it from the beginning. And I believed in what Coach represented. And in the early years, I thought of Coach as a democratized luxury brand. In America, we don't have a tradition of high luxury. We're a country of immigrants. And I felt Coach as a brand at the time, between mass and luxury, we occupied an important space in America, because consumers were increasingly moving into the middle class and looking for brands that they could believe in, brands that would deliver and exceed on their promise. And I thought that Coach really mirrored the best of America and the best of New York. So my passion was from the beginning. I always led with purpose and belief. And I do believe that when you consider employment, whether as a CEO or in any leadership role, or even in an entry-level role, if you have the opportunity of choice, choose a company that makes a product or delivers a service in an environment where you can thrive and excel, and a product and service that you believe in.
I have to ask you a little bit about the state of retail. I mean, so many big retailers are dealing with tariffs. I mean, the supply chains are changing. Can we make awesome bags and accessories in the U.S. and make them profitably?
The answer is yes, although if you want to give consumers the best possible value, you really need to make most of your products outside the United States, still out of the finest possible materials, supervised by leaders and craftspeople who really understand make. We live in a global economy, and I believe that we will return to that. I think the tariffs that are in place today and threatened for tomorrow is something that we're going to live with through this administration. But over time, we can only succeed as a global economy.
If you were still leading a retailer, a global retailer, like how do you manage through something like this?
Carefully. I think you need to be very mindful of everything you do, and certainly you want to be thoughtful before you pass on costs to consumers, and you also want to be mindful of not putting your suppliers out of business when you press them to participate with you. You need to be thoughtful and mindful, and recognize that consumers during this time might be more inclined to purchase less expensive products, and you might develop more entry-level products for those consumers who are discerning and concerned with expense.
I recently spent a good day with Ford CEO Jim Farley in Detroit, and the theme of his conference at the time was they can't get workers to fill critical jobs. He mentioned that they currently have 6,000 open positions at auto mechanics. I mean, I was just really struck by that. Is it that the U.S. doesn't have someone who could stitch an amazing bag together, or doesn't have that skill? Is that the problem?
50 years ago, we had those skills with our immigrant population. and it helped us become a prosperous and leading nation in the world. And our country depends on new populations to fuel jobs that Americans have graduated from, whose children may not want the same jobs that their parents had. And the reality is that many, many jobs are remaining unfilled in the United States, and it will become a significant problem in the service industries, in farming, in factories, in other enterprise in the months and years ahead if we don't find a way to attract immigrants from second and third world countries who want to live the American dream.
Wow. Wow. At the end of the program, Lou, we always love to get a hot take from our guests. Nothing planned here. I am convinced that you came up with the majority of the names for Coach handbags. You would always mention them on earnings calls. Like, how does a name for a handbag come about? I mean, Coach bags, they have names. They still do.
Yes, and the reason they have names is because you want women and men to be able to identify the particular bag they have. Again, they're attached to their bag emotionally. They have images and associations. It's a lot easier if you know someone and you know their name, because if you have a bag and it's the Brooklyn bag, you know it's a Brooklyn bag and you can proudly say that. If it's a no-name bag, you're not going to have that type of intimacy with a bag. So naming bags is an art and science. It's a blend of magic and logic. And you try to identify not only the personality of the potential user, but the attributes of the bag and what does it stand for. And Coach is a New York brand, even though we are also a global brand.
Lastly, Lou, look, I mean, your dad was a police officer, right? New York City police officer. You've come a long way. Like, how would you summarize your entire, corporate career?
I really believe that life has two parts. One is purpose and relationships. And I've been fortunate through my career, starting in government and through my coach world, to really have belief in what I was doing and to be able to attract and motivate teams that were able to focus on the greater good, teams that were highly collaborative, extremely curious, and create a culture that is a learning environment. The thing that I'm most proud of today is that Coach has become a legacy brand. It endures over generations in the minds and hearts of men and women around the world. And that, to me, is my ultimate quest. When I began with Coach, it was a small business in the Northeast. We ran out of product by Thanksgiving. We sold to anyone who paid their bills. And today, Coach is a global powerhouse. However, there's no complacency on the part of the leadership team. They work every day to understand where consumers were, where they are today, and where they're traveling tomorrow. And their focus on Gen Z is right on spot.
Real OG of retail, Lou Frankfurt. Fascinating chat there. All right, coming up, Julie Hyman has you covered for Market Catalyst. We'll be right back.